Alright, so I figured I would make this video so you can know and see exactly what I do uh, trying to become a day trader. I've been doing this now for a few days. Started end of last week, and I've continued doing it, and I found some success with doing it. But it's pretty much just the pre-planning of the next day. A lot of people think that you can hop into day trading. You just hop in front of a screen, look at some charts, boom, you can just do whatever you want to do without really having a game plan. I tried it, it doesn't work. I'm sure a lot of other people have tried it and it just doesn't work. But this is what I do every single day. Now, after, like I said, I've had some success with it over the last couple of days, and it just makes the mornings a whole lot easier whenever the actual day trading day starts. But here on the right side, I'm on TradingView. Here on the right side, I have all my stocks. So all I'm looking for is very simple. I have my setup showing 5 different indicators. Time continuation, which is what you see right here. This DWMQY, day, week, month, quarterly, yearly. Volume, of course. Broadening formations, it'll draw them out for me. It does miss some, but it does help some as well. The strat candle types, that's what you have these numbers under here just so it's easy to identify. I don't really have to take much of a look at it. And a lot of times I'll have this off, but last I have this level framework. Like I said, most of the time I do have it off, but I do use it on occasion. Those are the only 5 indicators that I have and what I use. The main one that I pay attention to when it comes to getting everything set up is going to be the strat system numbering over here. All I'm looking for is 2-1, 3-1, 3-2. That's really it. 2-1, 3-1, 3-2 on the last 2 candles. So in this case, 2-1. So that means if you look at the actual, we'll do this here. Strat combos, simple enough. Pull the sheet right up. So whatever. So you pull this sheet up here. Very simple. Whatever. I'll leave it as is. Pull this sheet up here. So look at this here. 2-1, 2-1, 2-1, 2-1, 2-1, 2-1, 2-1, 2-1, 3-1, 3-1, 3-2, 3-2. Those are really the only patterns that I use. Like, you can use the rest of these if you want to, but really I don't do it that much, just to keep it simple. I use, like I said, 2-1, 3-1, 3-2. Those are going to be the 3 that I always look for. So when I come back over here in a situation like this Arista Network, ANET, I'm going to go ahead and start mapping it out. So I always start on the 1-day time frame right here, 1-day time frame. And I see that it created a 2-1. Perfect, exactly what I'm looking for. I always try to check and see what has the most possibilities or the highest probability of the most gains. So in this case, going off of the 2-1 strategy, whether it be bearish or bullish, if it goes to the upside, going based on the previous candle, looks like I can get from 169.35 on up to potentially 177. On the downside, I can get from about 162.69 down to about 161.29. Obviously, upside has a lot more potential growth to it, but the downside, you can easily hit a quick lick on that and have a good day. So with that being said, I go ahead and draw my lines. So like I said, it doesn't matter whether it's bearish or bullish, I map them both out. So my white line is always going to be my entry point. I'll usually make the an orange line for my first target, and then a purple line for my top target. It may run past that, but that's always what I go with. Phoenix Suns colors, just because I'm here in Phoenix. So white, orange, and purple. So I started the 1 day. I already put down my baselines here, like I said, for whether it heads to the top or to the bottom. Then I'm going to always double check here and see how many more time frames to show the same pattern. So I'm gonna go down from 1 day, split that in half to 12. Cool, I'm still showing a 2-1, perfect. I'm gonna then split that 12 into thirds, and I'm gonna go to a 4-hour. Cool, still showing a 2-1, which is great. And then lastly, I'm gonna go down to like a 5-minute or a 3-minute chart, either one, something along there. And I'm gonna fine tune my lines and where I want to be at. So if you notice, I started on a 1 day. I put my initial lines on a 1 day. I hate whenever TradingView will add these lines on accident. Let me erase this one because I did not mean to put it there. So I got my lines. As you see, TradingView did pretty good in getting it close to where I wanted it to be. So this one here, a little bit higher than where I needed it. So I'm gonna go ahead and lower it down just a tad. Go down here. This one, I'll leave it. It's right about where it needs to be. I could lower it down just a tad. But like I said, the white lines are my entries. They're just a guideline. You can zoom in and see better how close you are. So that's right on the money at the bottom. And same thing on the top. You can zoom in, right on the money at the top. So all right, perfect. These are going to be my break points. These are going to be the points I'm looking for when it comes to either whether I'm put in a put or whether I'm going to put in a call. So right now, the stock is pretty much smack dab in the middle where it left off today, and that's perfectly fine. So then what I'm gonna do from here, I'm gonna bring it back a little bit. And I'll go to like a 15-minute chart. And I'll say, all right, so those are my break points. If it breaks higher, put in a call. If it breaks lower, then I'll put in a put. Cool. So now I need to come up with my target points. If you don't have a target point, then you're kind of going in blind. Like you might end up hitting, you might cross over what will be considered a good target and, not sell. But if you have an actual target point set, a target point in mind, a target point shown, already mapped out, usually it helps you in keeping focus as to where you want to sell at. Same as these here, the entry points. It keeps you focused as to where you want to buy in at. So for this lower level, the next point that I'm seeing, I'm gonna put it right at the bottom of this next candle here because it's the closest candle to where we're at. And also when you look further back, it's kind of right in the middle, which is fine. But then you get back a few days, couple weeks, I guess, and you kind of get this cluster. So at least from my perspective and the way that my mind catches it and thinks about it, is this cluster means that there was most likely some kind of friction. There was most likely some kind of resistance or support, one or the other. It doesn't matter. But there was something happening right here that still might be, quote unquote, clogging up the system. So that might be a potential cluster point or stop point moving forward. So I'm going to go ahead and place my first point there. Or not my first point, but my first target there. Boom. So my first target, like I said, I'm going to go ahead and map that out as orange. Cool. So my second target, I'm not the kind of person that's trying to be greedy. My second target, I'm going to once again kind of look back, see what I see. Going back to that second, I didn't mean to put that line there, but going back to that first target that I put, I didn't even pay no attention to this, but as you see, it got up to that point before it hit resistance. So that's my confirmation. This is probably a pretty good spot to put my target at. So now for my second target, I'm gonna look back at it. So right here, once again, looks like it had hit resistance before. It climbed up, boom, hit it. Climbed up, boom, hit it. So I would say that this is a good spot to put my second target. Once again, boom, climbed up, hit this spot. Once again, boom, climbed up, hit in this kind of general area and came back down. So I'm going to say that that's a good point to put as my second target. So I'm going to go ahead and take this line that was accidentally placed. I'm going to go ahead and make it purple. So now I got my entry, white line, my target one, orange line. My purple is going to be my second target. And of course, we hope that it dips even further to get us even more in the money. So now between my entry and my potential, in my case, 100% profit area, or what I would consider to be my final point, I have about a $2.50 buffer between these two, which is a nice gap when you're playing the options game. So that's all I do. I'm going to come up to the top and do the same. So once again, I got my entry already set. Let's go ahead and bump this down some. So looking at my entry point, as y'all can see, it got a little bit fuzzy right here, kind of hitting on it, tapping on it, yada yada, whatever. That lets me know, like I said, that's a good marker for my entry. So now let's find out where it was hitting at, going further up the chain. So looks like right about here. You see it get kind of fuzzy right in here. A little bit. It actually went up above it, but it get kind of fuzzy in here, kind of fuzzy in here, kind of fuzzy in here. All right, let me scoot on further down the line. Coming back over this way, looks like it gets kind of fuzzy again, and this is when that point kind of turned into support, and it started bouncing off of it. So I'm gonna go ahead and place my target one right here. Boom. So that's gonna be target one for me. So between my upward momentum entrance of 169 to target one is right at about actually a little bit, or that's a whole dollar plus $1.75. Like I said, this is my target one. I'm gonna go ahead and make that orange, and let's see if I can find a point for target two. So target two, I'm gonna go ahead and put it right about here. Why will this never work? Even though I don't know if anybody else get that problem with TradingView, but even if you go over here, it shows that a horizontal line is Alt H, but for whatever reason, whenever I press Alt H, sometimes it works, sometimes it don't. So I'm gonna go ahead and put my target two right there, and of course it's purple. So the reason why I put my target two there is, number one, we already showed that this was a potential resistance point in the past. If we come on over again, once again, it was like a little bit of resistance point right here. This here got close to it. That's letting me know, that's a pretty safe point to possibly have my target two at. So now I have everything mapped out for the day when it comes to risk to network, ANET. So tomorrow, whenever the market opens, all I'm doing is waiting for it to either cross over 169.22 and head upwards, or waiting for it to drop below the 162.60 and head downwards. This may not happen. This may not even happen tomorrow. This may happen a few days out. It may stay between this point, for a little while. But either way, I'm gonna just keep it on my radar. So what I do is I come up here and I actually drop down to the 1 minute, because I want to know. I don't want to know when a 15-minute candle closed, because that might be 14 minutes too late. I don't want to know if a 10-minute candle closed, because that might be 9 minutes too late. Whatever the case might be, I want to know pretty much exactly when it's crossing one of these boundaries. So I'm gonna go down to the 1 minute time frame at this point, and I'm gonna set me an alert here. So set my alert for price crossing up once it reaches above 169.22, and be sure to set your expiration for the end of trading day or end of trading session, or the end of the next trading session. Don't put it out for a week, a month, unless you're playing a long game or something like that. But I'm only day trading, so I just usually put it out for either the end of the next day or end of the day after. And cool, I got it set up to where it'll notify me in the app, email, sound, blah, blah, all that different stuff. Cool. And then I'll do the same thing here for the downside. So when it's crossing down, and it crosses down below 162.60, then once again, I have it set up to notify me. And actually, sometimes I'll put it on once only, but once only means it's going to only send you one notification. Once it crosses, it's not going to send you any other notifications. If you put it for every time, sometimes that does help you, because it might trigger the first time, maybe the stock drops down, and then it comes back up, and then it'll send you a second notification later if it finds that it got back to that point and dropped down again. So you can choose whichever one of these works the best for you. I'm gonna just put it for once only, and then I just check the logs as the day goes. So I'm gonna go ahead and create. When I go over here, I can double check. Here go my alerts. So ANET crossing up, crossing down, cool, everything in place. So when I come back to this, or tomorrow, or whenever this actually crosses either upwards or downwards, I should get a notification and see like, oh, let me go ahead and check that out right in the minute that it happens. I usually recommend, if you're going to be serious about day trading, to not try to do this from your phone. Try to hop on a computer and actually be watching this stuff as it goes through, because the quickest alerts that I've found, well, first off, all the alerts are slightly delayed, and when it comes to day trading, stuff can happen very, very quickly. But the email alerts probably come a little bit later than the rest. The alerts that pop up directly on your screen, if you're looking at it, they happen fairly quickly. So if you can be in front of your computer and actually be, have TradingView pulled up, you'll usually get a pop-up fairly quickly after it passes. But if you're waiting on emails or a push alert to come to your phone, usually it'll be a little bit late. So that's pretty much what I've been doing every single day, and it's been producing some phenomenal results. Kind of going back here, actually just taking a step back real quick, back to the 15-minute, because I noticed that my broadening indicator I have actually drew some stuff out. So just a heads up on that. So sometimes I'll map stuff out like I see, like I already got here, the white, the orange, and the purple, and the broadening formations will run straight through it. If ever you have a time where the broadening formation runs straight through it, usually, even if you have a little bit more to go based on the previous highs and lows, the previous candles, usually the broadening formation is going to be the best way to map that out as far as how far down it can go. So say, for example, this broadening formation, the green line here and the orange line there, say, for example, that green line was moved, somewhere up this way and came across like this. If it came across like this, like how my arrow is running right now, then I might go ahead and move this line up a little bit more to accommodate for the broadening formation. Because when you look at it, the broadening formation, all it is higher highs and lower lows. You're looking for the megaphone. See how you got the downside of the megaphone, the upside of the megaphone? So all you're doing is playing this as it bounces back and forth. These will create themselves as time goes. To kind of figure out, or figure out what you're seeing, you can always just go through the different intervals of time to see when is one created. But anyways, that's just a quick overlook on what I've been doing every single day. Like I said, I'm very early in my trading journey. The trading strategy or trading process is working very well for me at this point. I'm still, getting comfortable with it, but I've been finding that just doing the homework every day makes a huge difference. It makes it super easy the next morning. So yeah, that's that. Oh, I guess one last thing. So along with this, because obviously keeping track of this all digitally is nice, but it may not be the best for everybody, I do have a cheat sheet. This is what I write every single day. So if you notice, I just put July 8th watch list. That might be reversing the camera. But then I put the stock. I put what I found it at. In this case, at the 1 day, it was at a 2-1. And then I put where else I found, or what other time intervals I found that to match up. The more time intervals you can have that 2-1 to match up, I would say the better you are, or the better case of this 2-1 actually working out, no matter whether it goes up or goes down. Another thing to mention as well, time frame continuation. So like I mentioned earlier, I got the time frame continuation right here in my view at all times. So in this case, looks like it's had, I'll blow it up some. Looks like this stock has had, the last hour was green. For the day, it was actually red. But then for the week, month, quarter, and year, it's all been on an uptrend. With that being said, if you can get all of these to line up one direction or the other, that's another thing I look at. If they are all matching up, that means it is most likely or more likely to go the direction that all the arrows are pointing. In this particular case, the daily, I'm not going to think too much into it. It is going the opposite direction of the other ones. But normally, since I'm day trading, usually the ones I want to look at specifically is the weekly, the daily, and the hourly. I don't pay too much attention to the monthly, quarterly, or yearly because I don't swing trade. I don't long term trade, at least not as of yet. I'm looking at doing just daily trading. So yeah, like I said, the weekly, the daily, and the hourly is kind of what I look at, and the hourly, of course, switches all the time. But like I said, if you can't get them all to line up, it's even better. But with that being said, this is, I guess, a quote unquote tutorial from a newbie on my process that's been working very well. Hopefully, whenever you do see this, that it will be something that can help you also with getting your trading journey started. I plan to post these videos pretty much daily, so that way somebody can come back later and review them and hopefully get something productive and useful out of them. So, Mo Money Habits, I'm out. Peace. What the fuck?